Greetings, Fannie Mae and Freddie Mac warriors, and future Fannie Mae and Freddie Mac warriors. So we know that a number of us are in this stock for a long time. If you look at our comments, for example, on a Twitter or on a Facebook place, we also have some groups and on other places. Number of people will see that a lot of people are very worse in the happening about the stock because we follow that for number of years and number of us are long-term investors, so we know almost everything. We know about the suits, we know about the movement of the price, we know about the history, so it is like long-term story. But if you're a newer investor, what you need to know, so you're coming into the market and want to invest, and you take a look and you see like bunch of stuff is happening, and like, okay, the price movement like 10% up, 20% down, 30% up, and you ask, and there is a good news, and then you see the bad price. It's a lot of stuff is happening, and it can be scary for new investors. But what is important is when you invest, where your money will be in the future. If you're putting fresh capital, what do you expect to gain in the future? That is your purpose as an investor. Your purpose as an investor is not like to see, like to play around. We're in the stock market. Companies are making the profit. That profit, we buy the companies. Companies that made a profit give us money back in form of dividends or in the growth of the future of the stock price. So it depends, like, do you want dividends, do you want a growth, or both? If you invest in Fannie and Freddie, what will happen in the future if you buy now at 12? So what is your long term? What is your investment? Short term, long term. Short term is few days. Longer is like couple of months, and really long is couple of years. So on a short term, you will have volatility. There is the short sellers. The stock is on over the counter. The news are good and bad. It is basically good. If you ask me, everything what is coming from the government is good. I didn't even saw even one really bad signal about the stock. That they say, like, we'll not have the IPO. Actually, the Pulte said we'll not have the what he said, that it will not be removed from conservatorship. But yes, that is like that story I explained in one of the videos. That is like he said because the government will maintain some type of supervision over the company, but that doesn't mean that it will stay in the conservatorship as it is now and as it was up to now. So they will remove it. They will put in a stock market. They will do the IPO and so on. So if you invest the money now, in a couple of days it will go up and down. Can you expect that you will hit the movement? If you're lucky, good. Respect. They are day traders. They're coming and going, but they're like a really small percentage of the company, especially because it cannot be traded on some platforms that are traditionally for day trading or for short-term investors like Robinhood. So we are like on more serious platforms. That is one story. The second story is longer term. Let's say like 6 months. If you invest now on a $10, where the stock price will be in 6 months? In 6 months, we realistically expect that price will go up. If it goes up from, let's say now it's 11. If it goes up, let's say a whole year, just it is easier to calculate. If it goes up from 11 to 13, that is almost 20% of your gains. We talk from 11 to 13. So if you invest money now in 2 years, you will get almost 20%, not maybe. In a year, it will be definitely, because we are moving to IPO. And it is coming. So is it realistically to say that stock will move to 13 in next year, next December 2026? Will the price of this Fannie Mae and Freddie Mac will be 13? Unquestionably yes, for me. On a long term, because I personally believe it will be 100, but it's me. But all in order to satisfy like a regular investment desire to have 20% gain on the stock is that it reached 13. That is number one. Number two, if you're a really long investor, what will be the price range? Where do you think it will go? Me personally, okay, I'm calculating is by expectations, and the higher type of the expectation is 1,000 because of the buybacks that I explained in the previous video, one of the previous videos. So if you want, take a look, and I believe the government will do the buyback in order to sell the warrants for more. But even if this, let's say, like on 10 years, if the we double in 7 years, in let's say that in 10 years, is it realistic the stock price of Fannie Mae and Freddie Mac is $25? That is good investment. So you invest 10, in 7.2 years you have like 20, in 3 more you have like another 10, let's say. So isn't 10 years realistically the price of Fannie Mae and Freddie Mac is 30? That is the company that has 17 together. Fannie Mae, Freddie Mac have $30 billion net profit. Now Pulte said 50, that it will be 50, but let's say 30. In 10 years, company will make $300 billion of profit. The company, and at that point of time, it will have. So now the company, what is market capitalization? It's together. Wait, it is around. So we have 2 billion shares, $10 a share, 20 billion. Is it 20 billion? Wow, it is 20 billion. I thought that I was wrong. So in 10 years, is it realistically to expect that company value will be as much as it made the money? If we make now $12 billion, let's say Fannie Mae make $12 billion, 17 actually, $17 billion per year, and the market capitalization is 12 billion. Is that realistic? That earning of the company for 1 year is more than the market capitalization of the company. So buying now, you buy the market, the company that makes more per year than it is worth it. So if that is not a deal, I don't know what it is. Stay well, my fellow investors.